Hi guys, this is Lee with the Market Sense for the week of June 2nd, 2020. The Trade Navigator, he said carefully, is the software that we look at these charts from. That's provided to us by Gettess. And this is that same boring weekly bond market chart we've been talking about for some time now. They're sideways, and they're sideways until they aren't. And there's not much you can do about it. I will say this, if I was analyzing this market in a vacuum, paying no attention to fundamentals, which is normally the way I would trade, this momentum indicator here looks like they want to go down. They're in a sideways with lessening momentum. Boy, that's a pretty high probability they're going to break down, and I'd go with them if they get below 175.24. I'd be willing to go with them then. The problem is, if they break, you got to worry that the Fed will start buying because they have to keep interest rates lower, and Lord knows you don't want to be fighting the Fed. Very sketchy situation here. The only thing I can look at that has some promise is the 176, 16, 18 area right in here. If they seem to stall in that vicinity, that might be worth buying. You'd have to use a fairly large stop below 75.24, but they could be go all the way back up to 179.24 if you get them down there. So that, that's worth looking at. But sideways markets are just hard to make money, and we've been expecting this sideways market for months now, and that's what we've got. Now, stocks, they're frustrating for their own reasons. They have no connection to the economy at all. Doesn't matter how bad the economy it is. Doesn't matter how many businesses are closed down, people getting laid off. Doesn't matter we have turmoil in the streets because the Fed is supporting us, so we think we're okay. There's going to come a day when that ends, but right now that's still the way it is. We were looking for support to come in here in the just below 3,000, like 29.95, 96 here, and they haven't even gotten that low before starting up. Hard to argue with how strong they are, and again, it's all really based on the Fed supporting everything. I will say this resistance right up here, this is around the 3,100 level where that comes in. I'd really be tempted if they seem to stall in there. I'd be tempted to take a shot at them. Other than last week, they actually haven't really broken any of the resistance. They just kind of keep grinding their way through it. And since they haven't even traded support, might be willing to take a shot at selling them somewhere up there. Again, only if they appear to stall. You don't want to step in front of a rocket ship. And this last week closing this strongly suggests maybe this is. I mean, they could do that again this week. I think they should go down. I think there's all kinds of indications that they should go down. But again, you're fighting the Fed, so they're not going down, and that's really the bottom line. You got to look for reasons to buy, except they're not giving us any. So I would be willing to maybe go against the grain here, since this is a new all-time highs. I'd be looking to 3,100 area as potential area to take action. If we don't get that, or if it blows right through it, well, then I think I'm just sitting watching like the house by the side of the road. So that's what we've got for you today. Now, I sure hope you can find something profitable